What is going on, everybody? It is your boy Stas here. Welcome back to another video. So we got a lot to break down in this video. Like always, we're going to go over the stock market, break down the S&P, the Dow, the NASDAQ. We're going to talk a little bit about some individual stocks, and we have to break down some earnings. So sit back, relax, take a sip of, in this case, I have some water, and I have a smoothie here, guys. Take a sip of whatever you guys got, and make sure to get your 10 stocks from Moomoo, each up to $2,500 with a $100 deposit, and you could also get 12 stocks from Webull with any amount deposited. All those free stocks are linked down below. And again, cheers. Let's dive right into the video. So the markets were a mixed bag today. Like I said in my previous video, we had the Russell 2000 close up about 1% as the NASDAQ went down 0.4% and the S&P down 0.1% as the Dow went up 0.1%, and we had the VIX up 0.7%. Big day from silver. You guys can see here on the silver chart, we ended up going up over 4%. Silver's now breaking out of the moving averages. Golden cross as well here on the 4-hour. And with today's move, silver took the highs out from about a week ago, being about $20.50. So this looks like it's not fully reversing yet, but it looks like it's starting to build some momentum after months of selling. You guys have seen the metals. I mean, gold's been selling like crazy. Silver's been selling. Now it's finally starting to reverse. So let's see if that continues. And let me look at that gold chart very quickly, guys, before we dive into SPY and Triple Q. Gold is also looking to move out of these moving. I mean, it already is above the moving averages, golden cross, for the first time since the beginning of June. So these metals are slowly starting to turn. Now, is it going to be a huge reversal or a full-on reversal, rather? We don't know that quite yet, but we are starting to see the early signs of the metals reversing. So with that being said, let's go back over here to SPY. And one thing that I noticed when I was looking at this, I'm noticing a little bit of a bearish divergence here that's been forming really over the past couple of days, and I saw this a couple of days ago, really yesterday, and the day before that, but I'm not mentioning it until now. I don't know why I didn't mention it, but this is what I'm seeing right now. Even though we had a mixed bag day, the Russell did do very well, and SPY barely closed down, but it did go down on the day. We have to be very, very aware that, yes, we're dominating. The bulls are dominating right now. SPY's riding the 50 SMA well above the 180. But we have to be aware that we are starting to see some bearish indicators lining up here, right? We're noticing the C volume. Well, that's not necessarily a bearish indicator, but volume's been dying down the past couple of weeks here on SPY. Probably on Triple Q as well. And we're seeing here the RSI has been going down since, when was this? The last couple of days of July, early August, right? So this has been going down. RSI as the overall ETF has been going up. So the SPY's been going up, Triple Q's been going up as the move has been weakening according to the RSI. That's also known as a bearish divergence. So, I mean, in the very short term, that's what I'm seeing. Now, if you look back over here, and you could argue, Stas, that's not a bearish divergence, because if you look at the RSI from the beginning of June, it looks like it's been pretty much matching what SPY's been doing from the beginning of June. But if you're really nitpicking the chart here and looking at what's been going on in the past couple of days, there is a bearish divergence from the past couple of days. And we have to see how that ends up playing out. And let me see here. It's probably on Triple Q as well. Pretty much, yeah, it is on Triple Q as well. Pretty much in that same time period. End of July, heading into the early days of August. So watch out for that. If we do end up playing, or rather breaking under 316.15 on the bottom side on Triple Q here, then that bearish divergence, I mean, that means it would have been valid, right? It played out. And, from that point, maybe this goes to 305, 310, but we're not breaking down quite yet. And if SPY were to break under, let's say, 410, we see that bearish divergence fully play out, whatever. This could end up going down to 395, 400, but clearly that is not happening quite yet. And even if that does happen, guys, maybe we do get a little bit of weakness. Even if SPY were to come down to 400, it'd still be above the 180 SMA. That'd still be bullish. If Triple Q came down to, let's say, something like 295, 300, 305, even 310, that would be very bullish still, in my opinion, as long as it holds above the 180 SMA here on the 4-hour time frame. So what do you guys think? Let me know your thoughts, as always, down below. And if you haven't done so already, what are you doing? Make sure to hit that like button, subscribe, and don't forget to get all your free stocks linked down below. And with that being said, let's talk about some earnings. We had a couple of companies, not the most glamorous companies, most popular companies, but we did have some companies nonetheless report earnings today after the bell, and we had some in the pre-market, including Palantir, which Palantir did not do well at all today. So after the bell, we got Take-Two's numbers. Take-Two Interactive Software, which went down 1.3% on the day, closed at $125. And look at this, after the bell, it is down about $4 a share. This thing is down about, in other words, 3%, and it actually got all the way down to 113 just in the after hours today, about 10 minutes after the bell. That would imply a drop of about 10%, 9.5%, 10%. That's what it dropped initially there, and we've since recovered, but again, still down about 3%. So they lost $104 million on the quarter, and revenue came in at $1.1 billion on the quarter, and they see full year 23 loss of about $398 to about $438 million. So they're losing money hand over fist still. This is not a profitable company, and last I checked, look at this, 2 quarters ago and the last quarter, they actually reported a profit. So I'm not I'll be honest, I haven't done a full deep dive into Take-Two, but I'm sure there's some struggles in the business right now, supply chain, yada, yada, yada. There's got to be something, because they were profitable. Now they're vastly in the red. They're losing a lot of money, and they're going to lose money in the whole year, a full year 23, right? So what's going on? We got to look deeper into it. Again, I haven't done full research, but something's going on here clearly that has been contributing to the stock going down. And, really in the past couple of months, it's gone down very quickly. It went from, look at this, guys. It went from $160 in the end of March to $100 in the beginning of May. We're talking about a 1 month and a half. It went down 35%. So Take-Two is going through it for sure right now. And overall, from the all-time high, it's down 42%. So this stock is in the gutter. It's in a bear market. They're losing money, and who knows? We have to see when they can start turning a profit again, which is very important for a lot of investors. Sure, a lot of investors out there, maybe retail investors, I don't know, they like to invest in, and myself included. I have some speculative plays, but a lot of people have a lot of money in businesses that are not profitable. They're losing money quarter after quarter after quarter, and a lot of investors, they don't like that. They like to invest in companies that are consistently profitable, and rightfully so. Me personally, I like that philosophy, but again, I have about 5-ish% speculative, which, my portfolio, that could be anything that's unprofitable. Maybe it is profitable, but it's still speculative. That would be in the 5% category. Then everything else for me personally is REITs that I like, of course, individual stocks, ETFs, things like that. We've talked about a lot of these on the channel in the past. So let's talk about the next stock here, which is Blink Charging, ticker symbol BLNK. Blink ended up going up 4.5% on the day today, closed at $24, a little bit over $24, and now after the bell, it is down 8.3%. So Blink is by no means a big company at all. I mean, for Pete's sake, guys, they did $11.49 million of revenue in the last quarter, which crushed the estimate. I mean, that's great, $8.6 million estimate. But by no means are they a big company. This is very much so a small company. And so, I mean, they beat revenue and they missed on adjusted EPS. 41 cents in the red on the quarter versus 37 cents in the red estimated. So they beat revenue, missed adjusted EPS, and I'm not seeing anything on guidance, or at least I didn't last I checked. Let me double check now for you guys. Let's see here. Loss widens, all right. Higher revenue, that's great, but we're not seeing anything on guidance. So what do you guys think? Do you own Blink? I mean, this is probably a pure speculative play. I mean, if we look here at 2020, 2021, this stock was a lot higher. We're talking 65. Now it's at 24. It is down about 65%. Funny enough, it was at $65. Now it's down 65%. So Blink is definitely a speculative play, but who knows? It could end up succeeding in the long term. Another one that I haven't talked about in a while is ChargePoint, CHPT. Do you guys remember that? This has slowly been reversing as well. It seems like by the looks of it, we have a golden cross. We're above the moving averages. This triangle played out recently. We're breaking out to multi-month highs. Keep your eyes on ChargePoint. Good thing I thought of it. That one looks pretty decent right now. We also had Upstart report after the bell today, UPST. They also did not do well. Well, I guess Blink did do well with revenue, but missed on adjusted EPS. Upstart, they missed across the board. They did 1 cent EPS versus 10 cents estimated, so they missed on that. And they ended up missing on revenue, $228.16 million versus $241.63 million estimated. So double miss, and they see Q3 revenue, which is a huge amount under the estimate. They see Q3 revenue of $170 million versus $248.92 million. So that's not good. I don't even know how to put my words together after that. That is not good, and it makes sense that the stock is down, giving back all the gains and some from today. Actually, pretty much just all the gains from today. This thing ran up about 9% on the day, and now it is down after the bell about 9%. Look at that. They lost all the gains that they made today, and I suspect with this double miss and the awful guidance, it might be priced in. This stock it's not been treated well, let's put it that way, but I wouldn't be surprised if it continued to go down. This thing's down 93%. You might as well make it 95%. It might continue to go down at this point. Maybe it starts going back mid-low 20s. Watch out for that on Upstart. Novavax is another one, NVAX, which we have to cover. They reported earnings after the bell today, and they're completely tanking, which is insane considering this company and a lot of the other, vaccine or whatever you want to call them companies, they did well, the past couple of years. Now, not so well. This one is down wildly after the bell. This closed at $57 on the day, down 5% on the day. Now it's gapping down. Let's just put it that way. It is gapping down big time. It's down 30%. 30% after the bell here, guys, which is unreal. They lost $6.53 in the quarter, down from the $4.75 loss a year ago. So last year they were losing a crap ton of money. This year they're losing even more money, and their revenue's down wildly as well year over year. $185.93 million, down from $298 million a year ago. So for me, guys, with these vaccine companies, healthcare, whatever the heck you want to call them, I would not touch them with a 10-foot pole. The only healthcare stocks that I personally have owned in the past, and will most likely own heading into the future, these include something like a J&J, something like maybe an AbbVie. These are the only two that I'm really messing with right now. And to be honest, I've sold out of AbbVie a while ago. J&J is one that I still own a little bit of, but it's one that I wouldn't. It's one of those stocks. Let's just put it at this: these healthcare stocks, I'm not going to touch them, but for the most part, at least. But a stock like J&J is one that you just buy, reinvest the dividends, and just forget about it for the long term. At least that's what I think. A blue chip stock like J&J, that is what I believe. That's how you got to treat it, at least in my opinion. Let me know your thoughts, as always, in the comments. So let's talk about a couple of more. We had Clover today as well report. They ended up going up 4.3% on the day. And look at this. Clover's been reversing. We got a golden cross about a little bit over 2-3 weeks ago, a break above the moving averages. That looks fairly good here on Clover, and they just got a little bit too hot. The stock hit 360 earlier today. Now it closed at 340. Now it's down to about 313 after the bell, so it is down after the bell. They did EPS of negative 23 cents on revenue of $846 million versus $814.6 million estimated. So they're losing money, which is not surprising, but the stock's been reversing, like I said, and by no means is it out of the woods quite yet, because we're still at a higher low technically where we're at right now. You guys can see that. Boom, we're at a lower high at this point. But if this could start breaking out of, let's say, mid threes into the fours, it takes the highs out from the end of March. hey, that could be a point where it starts reversing. So watch out for Clover. We also have to watch out for Snowflake. They didn't report earnings yet. They do report in about 2 weeks from now. But today they had a 3% green day. Pretty nice day for Snowflake. We're seeing that ascending triangle I recently called out play out. We broke 165. Now we're at 170. And this could end up going up, in my opinion, towards 180, 185, really right towards the highs from the beginning of May. And I believe I called this out on Patreon. And by the way, shameless plug, if you guys want to check out the Patreon, join it. Now's the best time to do so in the beginning of the month. That is linked down below, or you guys can go to stocksurfs.com/Patreon. So Snowflake, it's breaking out. Watch it. I think it could go higher. And the last one is none other than PayPal, PYPL, guys. PayPal had a pretty good day today, which is why I'm covering it. It had a 1% green day in the midst of an overall choppy market. Yeah, the small caps did well, but other than that, the NASDAQ, Dow, S&P, they were pretty choppy. I think PayPal did well. So what we're noticing here on PayPal is obviously it's above the moving averages, golden cross, all that good stuff. But we're also noticing it's kind of cooling off. The dust is settling. We're, finding support here in the 90s, which I like. Hopefully, sure, it could easily crash back down to the 70s, 80s, but hopefully we now find some stability in the mid-90s. Not that I really care, because my PayPal shares are for the long term, so either way, I don't really care. But if I'm looking at it as a trade, hopefully we find support in the 90s, 90, 95, right around here, this 50 SMA, and if that were to break, all right, maybe we are going back to the high mid-80s, but as long as we hold mid-90s, low 90s, we could end up getting a pop off that 50 SMA, maybe to go retest those highs from earnings, which we hit over $100 after this company reported earnings last week. And full disclosure, I'm long PayPal. It's one of my individual stocks, and I'm not a person that owns 50 individual stocks. I've covered this before on the channel. I'm more of a 10, 15, 20 individual stock kind of guy. And this is one that I do believe in, that's in my basket of individual stocks that I do believe in for the next 3, 5+ years, because at the end of the day, it's a company that is making money. Revenues are growing. Good economic moat, in my opinion, and I know the business. I've been using it. I'm a customer. I've been using PayPal for a long time, and for me, I think it's a great trusted platform that will get through the short-term struggles that we're seeing now. And if they don't get through it, all right, that is going to be an L for me. But who are you to say you can't get an L in the stock market, guys? Because everybody has L's in the stock market. It's impossible to win everything, right? So with that being said, guys, I'm going to wrap the video up. Make sure to smash that like button, subscribe if you haven't done so already, and make sure to check out the Patreon, and don't forget to get those 10 stocks from Moomoo with a $100 deposit, and the 12 stocks from Webull with any amount deposited. All those links are down below, and just know, guys, all those links help out the channel, and without you guys watching, supporting, this would not be possible. So with that being said, cheers. I will catch you in the next video. I'm going to go eat some dinner. My fiance is whipping up something interesting down there. Going to go eat that, try it out. I'll see you guys later. Peace out.